This is Talking Capital Markets, where ideas drive the markets. We move past the headlines and into the heart of the deal, breaking down IPOs, M&A, governance, and the strategies driving real growth in today's capital landscape. No noise, no hype, just conviction, execution, capital in motion. If you're building companies, raising capital, advising boards, or deploying investment, you're not just listening, you're in the room. And now, here are your hosts, Mike Blankenship and Brian Jue.
Welcome to Talking Capital Markets with Mike and Brian, where we talk about everything related to the capital markets and how everything intersects. Law, finance, business. And what are the capital markets? That's where you're raising capital. That's where you're going public, the IPO process. That's where you're buying and selling other companies. So we talk about all that. I'm Brian Jue, and as always, with my great co-host, Mike Blankenship.
Thanks, Brian. Great to be here. Look forward to speaking about the capital markets and the continued growth that we're hopefully going to see.
All right. So, hey, it's a brand new year. It's 2026. Super exciting. Let's talk today about what we see, what we think is going to happen in 2026, and let's focus on the IPO markets. You know, I think there's going to be a lot to be talked about because already, you know, people are excited and gearing up for the anticipation of some big companies potentially IPOing, if not this year, shortly thereafter in 27. I think with SpaceX and OpenAI, and Anthropic, and maybe Liquid Death. You know, you got some big companies that are thinking about that IPO. Mike, what do you think?
Yeah, I mean, there's a lot. Most of these are hundreds of billions of dollars. So they're going to raise, north of, a few billion, and we'll probably see some record-setting ones here next year. So those are like almost a certainty. I mean, I certainly hear it in the market that these are going to be out there. There has to be some liquidity for their previous investors who've put hundreds of millions to billions of dollars in for previous series rounds, and so we're going to see some of that come out, and they'll be public. But what I really think we should talk about is some of the smaller IPOs, ones that are targeting that sub-million valuation and sort of how that looks and where sort of advisors. I think we're going to continue to see in that, some of those smaller IPOs because the break isn't as bad if it goes the wrong way. And I think we'll see some of that and hopefully down the road. And, really on the smaller ones, in my view, and I'd love to hear yours, Brian, is, credibility certainly matters more than the growth because these companies, while they are where they're at, will grow and people want growth. But, you have to have a credible story that people aren't, the deal's not being pulled, that the numbers aren't changing, there's no shifting. Really, when I advise these kind of companies, making sure their capital structures sound. Having multiple share classes can sometimes be confusing for folks. And so making sure that, you understand that as well. Love to get your take on that though, Brian. What are you seeing or thinking this year?
I have to agree with you that, we know the big ones are coming, right? And I think what's going to happen there though, is that's going to create a lot of excitement and a lot more interest in the smaller IPOs because people see this is the route. And I think what a lot of people don't realize is before, VCs became what they are today, VCs, which are basically institutions, right? For their financial institutions, just that they're on the west side of the United States instead of, on the eastern seaboard, right?
Mm-hmm.
But before then, and this is not too long ago, I mean, I remember like it was yesterday in the the 80s, the 90s. And for me, really getting involved in the 90s and then into the early 2000s, if a company had a great idea and they had proof of concept and some had revenue and some didn't, but they actually used an IPO to fund the company. They didn't go through your series A's, B's, C's, and, and all the letters of the alphabet to, get that initial capital. There's a lot that went to market. And I know that because I was a part of a number of them. It was a way for companies that might not have had access to the right VC or the right angel investor, to go public, to raise capital and have a shot. And I think we're going to see a lot of businesses like that, meet the minimum thresholds. And then for a big gap that exists right now is, your lower mid markets, your companies that might be, have an enterprise value of 20 million, 50 million, $100 million that is too small for the attention of a major investment bank or a major PE firm. How do they exit? How do
Mhm.
they, how do they get out? What do they do? Some of those businesses we're literally going to see just fold up and close down, and which is unfortunate because still today, even with corporate taking everything over, small business, the lower mid markets, that is the heartbeat of America. It is the heartbeat of our economy, what powers it. And we need it. And I think that the smaller IPO will help us preserve that, the integrity of our country and, the base of, our economy.
Yeah, I mean, I certainly agree. It's the small businesses where most of the statistic in front of me, but most of the employees are with smaller businesses. You see it when you see a lot of this energy. I travel to San Francisco, the Bay Area, a lot, as you know, and I see a lot of those leaders and founders and investors. There's a real appetite to be out there and grow their business because it's fun for them. It's fun for these companies, and it's not just a dredge of bringing in money and kind of moving. I think a lot of them want to grow, especially in that tech sector where we're seeing a lot of that development now. That's where a lot of the IPO market, but some of these smaller companies want to be out there, and it's great to your point, to be trying to, raise capital early on and they're public and have the right story. Sometimes these banks, to your point, is that if they're sub $500 million valuation, they're not going to get the research coverage, which then prevents them from being in front of institutions, which prevents them from investing in them. But they'll, the right company, the right kind of credibility, as I mentioned earlier, having the right growth and the right people will see them grow to those links because I think they can be charged with having, the equity to help do an M&A roll-up strategy or some sort of strategy using the capital that or the securities to instead of using just cash, so you can have more free cash flow will be helpful. And then finding the right strategy as you move forward as a company in the public sector. You get a lot of questions, as you know. It's open the doors to everyone and to get all the material information out there. But it can be helpful too because you're trying to help companies understand and invest. I know the good players out there will do it right, and your company will see a lot of growth and accelerate from that. I mean, I really do think there's a lot of potential good exits for companies, but these aren't just exits. To your point, sometimes they're ways to infuse capital that can be the catalyst to do more and do more for the U.S. economy, meaning hire more people, do more sort of if it's real estate related, have property and really bring people there, and that really will help grow. Those investments help grow our economy, help grow the local economy as well. I mean, we have a initiative here where we're trying to invest in our cities and our communities, so we try to be part of that as well. And it's the same, I think, for businesses that are in the communities that they're in, whether it be in North Carolina or whether it be here in Texas or California, New York, Illinois, Florida, all over. And so I think being part of that continue would be very important. In having the right people, again, what do you see, Brian, as the right people as these companies go forward?
Obviously you need great legal counsel, right?
That's a given.
And obviously, you need great financial support. The right auditing firm matters. The right PCOB firm matters. I mean, unfortunately, I've seen too many firms that and I haven't seen as much these days, but this will come back with smaller IPOs. Is the when you have the wrong auditor in place and they hold companies hostage, to get their numbers done, right? To make sure they get paid and, all these other kinds of things. And I've seen a lot of stuff like that that's not cool. So you need to have the right group there as well. And you need to have people internal in the company. I think that's one of the biggest traps that a lot of smaller publicly traded companies have, is that they don't have any experience operating a public company, excuse me. They don't know that there's multiple jobs, that you do have to talk to the investment public. You do have to be to manage the public process, and you do have to operate the business. And so sometimes I think that if you have the right advisory in place to kind of help manage all of it, it can be a real win for the company. But kind of something that came to mind when you were just sharing, Mike, is about institutional coverage and about the, what banks are going to look at these smaller public companies. I think something that a lot of people need to remember is, well, what is the biggest bank in the world? And that's the investment public itself. And I think something that really is going to help fuel this next level of bringing back public companies is the investment public is changing. And, as you know, Mike, we talk about this a lot. I like Gen Z, right? And I work a lot with, I'll call them kids, but, young adults, right? And their interest in the public markets is much stronger than I've seen in previous generations. We've always had, interns coming around and, things like that, and people, looking to intern with us. The amount of people that I'm getting now that want to learn about the capital markets is staggering. And their knowledge and their understanding about the capital markets and the need for themselves at a young age to be vested in public securities that have a chance of growth is the way for them to jump ahead, right? Because it's tough out there and they know it. It's real. There's a lot of white collar professional jobs that kids went to college for once upon a time to then get that job that aren't going to exist the same way. It's going to be different. And so with that being more competitive with everything else, I think there's a generation now that is looking to potentially, invest in publicly traded companies. And on that, Mike, what do you see there? What's the number of public companies once upon a time to today has changed, and where do you see that going?
Yeah, look, I think there's an interest to do more. So I think some of the restrictions around cost as well as timing and regulatory burden has shifted. And so I think, you go back to 2012 when they put the Jobs Act in and then the FAST Act, a few years later, there's trying to find ways to make it less burdensome on these companies because, a lot of the costs shifted to the audit as well as just the ongoing cost of being a public company and the internal controls you need and the cost structure. It can be daunting for a company. And so, you have to have the right, again, mindset about wanting to be public, but also understand that there are these costs. I think trying to alleviate those, we're seeing some at the regulatory bodies hopefully making it a little bit easier, certainly in speeches, and we'll see if there's regulatory relief or guidance out there. But I do think we'll see more in the coming years. I think we've seen where today, private equity is doing a lot more continuation vehicles and other things, keeping a lot of their portcos owned longer than trying to go out and go public. And maybe that way get off that fourth rail and do the kind of second rail beyond the merger where they go and do an IPO. And so maybe we'll see a lot more of that because the valuations are hopefully better suited than just going out and trying to sell it or flip it. And so maybe that will be a catalyst to see more of those as well. So that's how I see it.
Very good. Very good. Well, thank you, everybody, for joining us for this episode of Talking Capital Markets with Mike and Brian. Again, I'm Brian Jue and
Mike Blankenship.
Join us again for our next episode.